Welcome everyone. In this video, we will look at why tomorrow is the big day for XCN. Don't forget to subscribe and please watch to the end to understand. Maybe you know that there is a meeting of the Fed tomorrow and this will affect the market. And let's see how XCN coin can make a move. Looking at the chart in detail, we can see a prominent falling trend line that has been in place for a long time and has been tested many times. This trend line acts as a strong resistance, limiting the price's upward movements. And every time the price touches it, it pulls back and continues its downward trend. However, as is often the case in technical analysis, the more a resistance level is tested, the stronger the chances that it will eventually be broken. At this point, the current position of the price represents a rather critical stage. Currently, the price is moving near this long-standing falling trend line. In previous attempts, the price failed to break this trend and retreated each time, facing selling pressure. However, over time, the declines have weakened, and the price has moved closer to this trend line again. This may indicate that buyers are gaining strength and the selling pressure is gradually diminishing. If the price can break the downtrend line to the upside on strong volume this time, it could be an important signal that a trend reversal has started. In case of an upside breakout of the downtrend, the price is likely to turn bullish and test new resistance levels. If this breakout occurs, buyers may be expected to support the price upwards by showing more interest in the market. In particular, if the price retests the trend line after the breakout and continues to rise, it could be considered a strong bullish signal. It's not enough to just look at the trend. Let's look at other metrics. According to the Elliott wave theory, price action is currently moving in the second wave and is in a retracement movement towards certain Fibonacci levels. Technically, the second wave is usually a correction wave after a sharp rise in the first wave, and the price pulls back to test certain support levels. At this point, Fibonacci levels give us important clues about the critical reversal zones. In the current situation, the price action has broken the Fibonacci 0,618 level to the downside and is heading towards the 0,786 level in a deepening correction. The Fibonacci 0,618 level usually works as a strong support point, and in many cases, the price reacts to it and moves into the third wave. However, the fact that this level has been broken suggests that the price may make a deeper correction and retrace back to the 0,786 level. If the price actually reaches the 0,786 level, this area can be considered as a strong support point, and buyers can be expected to step in and push the price upwards. This is because, according to the Elliott wave principle, the third wave following the second wave is usually the strongest and the one that brings the sharpest rise. Therefore, if the price retraces to 0,786 and finds solid support there, it could be an extremely positive signal for the upside. But there is one more element that makes this level even more powerful: a bullish order block right at the 0,786 area. A bullish order block is a critical liquidity area where big players and institutional investors buy. Usually, when the price hits such blocks, it reacts sharply and shows upward momentum. Especially the areas where Fibonacci levels and order blocks coincide form a much stronger support area. Because there is both a Fibonacci support point based on technical analysis and a buying zone for big investors. This means that the price coming here is more likely to receive a strong reaction. While the 0,786 Fibonacci level alone is a very strong support point, the fact that the bull order block is right at this level increases the support strength of the region. In other words, it is a very likely scenario that the price, which has fallen so far, will get a sharp reaction from here. If buyers step in when the price reaches this zone and start to move up in volume, this could be a strong signal that the third Elliott wave has started. This is because the third wave is usually the strongest and most powerful bullish wave, and it is one of the biggest moves in the market. Of course, the most important thing to consider here is how the price will react to this level. If there is strong buying and a breakout to the upside with volume, this could be a positive signal that the uptrend will continue. And the more reactions an order block receives, the weaker it is. And there is a bearish order block located in the top zone. At the moment, the price is moving within a certain trend and is yet to break out of it. However, if the price manages to break this trend to the upside, one of the most important obstacles will be this critical bear order block. If the price moves towards this block with a strong momentum, it may face some selling pressure at first, but after testing this area sufficiently, the breakout may occur. In such a scenario, the uptrend is expected to continue. Currently, the price is hovering at the trend line that needs to be broken, and if this trend line is breached, a move directly towards the area where the bear order block is located can be expected. There may be a pause here at first because in the past the price may have encountered strong resistance in this area. However, as this area is tested, the probability of breaking through will strengthen. Especially if a breakout occurs on volume, there is a possibility that the price may turn this area into a strong support. In a positive scenario, if the price tests this bearish order block and finds enough buyers here, the bearish pressure may ease and a new upside move may start. If the price breaks it hard, new targets could be set at higher levels and the upward movement could accelerate. Overall, we have an important process ahead of us. First, the price needs to realize the trend breakout. Once this happens, it will want to test the bear order block as the first stop. Here, it will be very critical how the price will react. It may not break it in one go, but it will surely break it in several. A detailed analysis of the MACD indicator shows that it is currently trending sideways below the zero level. This suggests that the market has been in a bearish trend for some time, and the momentum is still negative. However, there is an important technical detail here. If the MACD makes an upside cross with the signal line, it could be a bullish signal. In particular, crossovers below the zero level are considered one of the strong signals of trend reversals. Currently, the MACD line is fluctuating just below the signal line, trying to determine its direction depending on the movement of the price. It is obvious that the market is currently underselling pressure, but there are some signs that the declines are weakening. If the price reacts upwards from a critical support level and the buying pressure strengthens, there is a good chance that the MACD will follow suit and move upwards. In such a case, the MACD line crossing the signal line to the upside would be a very positive signal for the market. Because these intersections are very important for the market's momentum, and we have seen many times in the past that similar intersections have triggered strong bullish movements. If this scenario materializes, we could see an upward acceleration in price action. At this point, however, it's important to keep this in mind. It is not enough for the MACD alone to make an upside crossover. The price also needs to react from strong support zones, volume needs to increase, and the overall market structure needs to be bullish. If these factors come together, the MACD's upside crossover can start a strong bullish movement and the price can move towards new targets. How the MACD reacts here will be of great importance, especially as it approaches the zero line. If the MACD starts to rise towards the zero line and makes an upside breakout there, it would indicate that the bullish momentum is getting stronger. However, if the MACD approaches the zero line and sees downward pressure here again, this could signal that the price will remain sideways or slightly downward for a while. To summarize, the MACD is currently trending sideways below the zero level and has yet to make a strong upside crossover. However, if the price finds support and the MACD moves upwards in parallel, we may see strong signals that the uptrend has started. Therefore, how the MACD will move in the coming days will be a very critical factor. If there is an upward momentum, it is quite possible that the price will react positively. Finally, keeping a close eye on the MACD's movements below the zero line is crucial to understanding the direction of the market. If there is an upward crossover and then a bullish move, it will be a positive signal for the market and the groundwork will be laid for the price to move higher. Yes, friends, let this video be like this in this video. Don't forget to like and subscribe. See you in the next video.